Hey, good morning, everybody. My name is Cliff Backus. I am the Chief Market Strategist for Push Button Stock Trading, and this is your daily video market review. But before we start, as a friend of mine frequently asks, if I was stranded on a desert island, what would I need? Well, I'd need three pieces of software: highgrowthinvestors.com, freestockcharts.com, and MarketSmith. MarketSmith is a set of investment research tools for mastering the market, offering a set of extremely robust stock screeners, charts, and pattern recognition. More importantly, we use MarketSmith to generate our stock checklist, which we use to develop our universal watch list. Take a free trial of MarketSmith. Next, we have freestockcharts.com, which is a Warden Brothers product and has all the versatility of their TC2000 program on an a la carte basis. These are the charts we use in our daily video market review. I use the premium version, but they also offer an advertising-driven free version. And lastly, I would need highgrowthstock.com, HGSI. HGSI is a remarkably versatile product that I use for analyzing and screening data. The Spectrum Analyzer is an HGSI product, and you can get a 1-month free trial of highgrowthstock.com, and you don't even need a credit card. And that's our commercial for this week. Stocks closed narrowly mixed, with the NASDAQ closing higher and the S&P surrendering small losses, both on heavier above-average volume Friday. The IBD 50 and the 85-85 both advanced on lighter trade. Importantly, the Russell was up and closed above a key resistance level that we've been monitoring. However, the NASDAQ again tested and failed at a key resistance level in the 5164 area. On the New York Stock Exchange, declining issues topped advancers by better than 3-2 Friday. New highs bettered new lows. According to our Ramosi ratio, which compares the S&P 1500 to the S&P 500, for the first time since September, small capitalization stocks outperformed large. Large caps continue to outperform on a 10-day moving average basis, which is behavior less typical of a bull market. Our swing timing model is showing a short-term, extremely overbought condition in the market, so be careful. Longer term, our market timing model on both the NASDAQ and the S&P 500 remains on a buy signal, indicating that aggressive traders should maintain current margin levels and let their trailing stops take them out of current positions. More conservative traders can continue to redeploy capital on the long side, keeping your stops in place. The O'Neill timing model is indicating a confirmed uptrend in the market. Distribution is a concern, but much of the distribution is aging and beginning to fall off our count. Distribution is no longer relevant after a month and is removed from our totals. Today we removed the October 6th distribution day from the NASDAQ, leaving us with, according to my count, 5 distribution days in the past month for both the NASDAQ and the S&P 500. Investors Business Daily, which keeps a more sophisticated tally, has the distribution counted a much more bull-friendly 2 for the NASDAQ and 4 for the S&P 500. Distribution is a sign of institutional selling in the market, and too much distribution over a short period of time can indicate that a market's in trouble. All of our timing models are bullish, but our swing timing model is indicating a short-term, extremely overbought condition in the market. While an extremely overbought market can become severely overbought, short-term caution is advised. That being the case, bulls may want to take advantage of any short-term weakness that develops to bolster their long positions. We're now over a month into the confirmed uptrend. Traders should be fully invested or nearly so, keeping stops in place and being sure to follow their written rule sets. A note about written rule sets. Emotions are the enemy of good trading. Rules keep emotions in check, and written rules allow us the greatest edge when trading. I write my trading rules down in outline form, so there's never any doubt as to how to handle any situation that the market sends my way. If you would like help with portfolio management or with your written rule set, please feel free to give me a call. My contact information's on the homepage. Okay, let's take a quick look at our spectrum analyzer. What we're looking at is HGSI, High Growth Stock Investors' universe of over 8,000 stocks, sorted by a combination of the most powerful stocks and the most powerful industry groups. We've made a group of the top 100 stocks in that sort. The reason that we look at this is that by noting where the strength is in the market on a daily basis, we can get an idea of where the power in the market is rotating to. The basic premise of momentum investing, which is what we're doing here, is that we need to identify where the power is in the market and get out in front of it. So let's plug these stocks into our spectrum analyzer and see where the strength in the market is. On Friday, of the top 100 stocks in our sort, 18 were from the semiconductor devices group. 11 were from application software. We had 7 banks, 7 stocks from the internet media group, and rounding out the top 5, we had 5 airline stocks. Let's drill down a little into semiconductor devices. In semiconductor devices, we have Analog Devices. Analog Devices manufactures analog, digital, and mixed signal integrated circuits for the industrial, telecom, consumer, and computer markets. We can see that the stock's been working on this cup and handle base. We have a buy point at $64.16. Analog Devices gets a checklist rating of 36, so it's not one that would be on our universal watch list. Next we have ARM Holdings. ARM Holdings is a British designer of microprocessors and physical IP components used in mobile phones, computing devices, and digital TVs. We can see that ARM is currently working on this cup and handle base with a buy point up here in the $49.86 area. ARM Holdings gets a checklist rating of 48 and also wouldn't make our universal watch list. Next we have Avgo Technologies. Avgo is a Singaporean designer of analogics for the telecom, industrial, automotive, and computing markets. Avgo is on our universal watch list. It gets a 68% checklist rating. And on Friday, it broke out of this downtrend. Avgo right now is in a first stage base and can be bought by aggressive traders on the break above that downtrend. I'm going to power through a few more stocks here and then we'll move on. Inphi is another one on our universal watch list. Inphi designs analog multiplexers, encoders, amplifiers, and memory buffers for servers, routers, and storage equipment. Stock had been setting up this third stage base. It broke out of that area a couple of weeks ago. Inphi gets a 76% checklist rating. Next we have Integrated Device Technology, which manufactures memory, logic, and telecom integrated circuits for the consumer, computing, and communications infrastructure markets. Stock recently put in this cup with handle base. It broke out of that area and has been moving steadily higher ever since. IDTI is on our universal watch list. It gets a 72% checklist rating. And the last stock of the group that I want to take a look at is MaxLinear. MaxLinear provides RF, analog, and mixed signal integrated circuits used in communication and video display over broadband networks. MaxLinear had put in this nice little base. It gapped out of that base at the beginning of last week on earnings. It also is in our universal watch list and gets an 88% checklist rating. Let's continue by taking a look at the Russell 2000. We've been watching this downtrend in the Russell 2000. We broke out of that downtrend earlier last week and had been struggling with resistance up here in the 1194 area. On Friday, we took out that resistance area, which puts the Russell 2000 in an uptrend. The Russell's the last of the indexes that we follow to actually resume its uptrend. It'll be interesting to see if we can hold this 1194 area. Let's take a look at the NASDAQ composite. NASDAQ on Friday was up 19.38 points or 0.38%. It closed at 5147, and again, we tested this resistance level in the 5164 area and failed. but we did close at the high of the trading session, which is encouraging to the bulls. Trading volume was just a little bit higher than the prior day and a little bit above average. Right now, for you followers of William O'Neill, the NASDAQ is on a confirmed uptrend. It has been since October 2nd. On Friday, we dropped this distribution day from the NASDAQ count, which gives us 5 distribution days in the past month, although the Investors Business Daily doesn't count these 3 distribution days, and so their count is 2 distribution days in the past month. NASDAQ is bracketed by support down here at this trend line, and resistance near its prior high in the 5164 area. We continue to squeeze the NASDAQ. Eventually it's going to break one way or the other. It's going to break below this trend line and go lower, or it's going to break above resistance up here and go higher. Right now, on our market timing model, the NASDAQ is on a buy signal, which indicates that aggressive traders should maintain current margin levels and let your trailing stops take you out of your current positions. More conservative traders can continue to redeploy capital on the long side, keeping your stops in place. Let's see what the S&P 500 is up to. S&P on Friday was down 0.73 points, or 0.03%. We closed at 2099, and we tested support at this trend line and held. Trading volume was above the prior day and also above average. Although the S&P was down on heavier trading volume, it didn't meet the 0.2% threshold required for distribution day, so we didn't get a distribution day on Friday. The S&P right now is in a confirmed uptrend and has 5 distribution days according to our count. IBD doesn't count this day, and so IBD is showing 4 distribution days. Right now, the S&P 500 is bracketed by support at this trend line and resistance at its prior high of 2134. The S&P 500 is on a buy signal. Let's take a look at some stocks that we may be interested in watching, but before we do, just a note. All of the individual stocks that we talk about in our video market reviews are from our Universal Watch List, which you can view by going to the pushbuttonstocktrading.com homepage and clicking on Blogs, then Daily Spreadsheet, and then clicking on the link. Depending on the operating system you're running, you may need to click on a dialog box to open the spreadsheet. Once the spreadsheet's open, you simply go down to the Universal Watch List tab, click on the tab, and that will bring up our Universal Watch List. To qualify for our Universal Watch List, a stock has to have satisfied at least 72% of our stringent technical and fundamental criteria, and continue to satisfy at least 62%. Out of our trading universe of over 7,000 stocks, there are generally only about 50 to 90 stocks that meet these strict criteria and make our Universal Watch List. These are the only stocks we review in our daily video market review, and for the most part, they're the only stocks that we use in our trading strategies. That noted. This was a tough week to put together a watch list, but let's take a quick look at what we have. First, we're going to look at LGI Homes. LGI builds entry-level single-family homes in high-growth markets in Texas, Arizona, Florida, and Georgia. The stock has been working on this second stage square box base with a pivot point of $33.87. It gets a checklist rating of 80. And we have this trend line. The stock can be bought by conservative traders when it breaks above this 33.87 area on at least 140% of average daily volume. But more aggressive traders can buy on a break above this trend line in anticipation of the breakout in the 3387 area. Next, let's take a look at Fitbit. Fitbit Incorporated develops wearable connected health and fitness trackers and mobile apps that wirelessly sync with its devices. The stock is working on this first stage base with a pivot point up here in the 5190 area. But we have this lower breakout point in the 4204 area, more aggressive buy point. Fitbit gets a 72% checklist rating and can be bought by aggressive traders on a break above this 4204 area on at least 140% of average daily volume. More conservative traders may want to wait for a break above the 5190 area, again on 140% of average daily volume. Next we have Store Capital Corp. Store is a REIT that owns 947 single-tenant commercial real estate properties in 46 states operated under long-term net leases. Stock's been working on this first stage cup with handle base with a pivot point in the $23.13 area. Store gets a 72% checklist rating and can be bought on a break above that $23.13 area on at least 140% of average daily volume. Nice thing about Store is it gets a 5% dividend yield for you dividend investors. Next we have Mobileye. Mobileye is an Israeli-based developer of software and related technologies for camera-based advanced driver assistance systems. They make anti-collision and collision avoidance systems, and they also make the systems that allow for self-driving cars. Mobileye's been working on this second stage base with a pivot point in the $64.48 area. But it has a little bit more aggressive entry point down here in the $52 area. Mobileye gets an 80% checklist rating. We can also draw in a trend line on Mobileye right here. Aggressive traders can buy on a break above the trend line. They can buy on a break above this $52 area. More conservative traders will want to wait for a break above the 64.48 area on 140% of average daily volume. And the last stock I want to take a look at is Seacoast Banking. Seacoast is a holding company for Seacoast National Bank operating through 43 offices in Martin and 13 other Florida counties. The stock put in this kind of goofy little double bottom base with a pivot point right here in the 1589 area. That breakout failed, and the company immediately went into this cup-shaped base with a pivot point up here in the $16.05 area. This is a first stage base and can be bought by aggressive traders on a move above the $16.05 area. Seacoast gets a 64% checklist rating, and it should be noted that it only trades 116,000 shares average daily volume. Generally, we want to see at least 250,000 shares average daily volume. Seacoast Bank can be bought by aggressive traders who are looking to get some money into the financial sector on a break above the 1605 level on at least 140% of average daily volume. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LeCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LeCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LeCours Incorporated believes to be accurate. Ohannes & LeCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LeCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.